Hello and welcome candidates to the Advanced Auditing and Assurance lesson. The topic is Audit, Evaluation and Reviews. Today the subtopic is Audit under Taxation Laws. Audit under Taxation Laws. And candidates, audit under taxation laws involves the examination and verification of a company's financial records and tax-related information to ensure compliance with applicable tax laws and regulations. In our today's lesson, we are going to study some of the key points to consider in the audit process under taxation laws. And the first point is understanding tax laws and regulations. Auditing under taxation laws requires the auditor to understand tax laws and regulations. The auditor should have a thorough understanding of the tax laws and regulations relevant to the jurisdiction in which the company operates. So if the company operates in Kenya, then the auditor should have thorough knowledge of taxation laws in Kenya. And such knowledge will include knowledge of income tax, knowledge of value-added tax, the knowledge of value-added tax laws, the customs and excise tax laws, and any other relevant tax provisions. For one to audit under taxation laws, one has to be well versed with the taxation laws and regulations relevant in the jurisdiction in which the company operates. That's the first important key point. Now, the second key point is review of tax planning and strategies. Review of tax planning and strategies. Review of tax planning and strategies. The auditor is required to do what? To review the tax planning and strategies of the company. Here, the auditor assesses the company's tax planning strategies to understand their compliance with applicable law in the country. And that may include reviewing the company's tax planning policies, the transactions, and also any tax incentives or exemptions that the company claimed during the year. Number 3 is verification of tax computations. Verification of tax computations. The auditor here verifies the accuracy of tax computations made by the company, including the taxation of taxable income, deductions, credits, and any liabilities or refunds. Verification of tax computation. The auditor may do recalculation and verify that the tax computations are accurate. And that may include even examining the supporting documents such as the financial statements, the tax returns, the relevant schedules or disclosures. When auditing under taxation laws, there is the need to verify tax computations. Tax computations. The fourth point is compliance with tax filing requirements. Compliance with tax filing requirements. The auditor here ensures that the company has met its obligations regarding tax filings, including the timely submission of tax returns, and supporting documentation. The auditor here again may review the completeness and accuracy of the information provided in the tax returns. You understand? Moving on to point number 5, assessment. This is the assessment of tax risks and provisions. Assessment of tax risks and provisions. The auditor assesses the company's, he then assesses the company's tax risks, including the potential tax liabilities, uncertainties, and contingent tax liabilities. The auditor may review the adequacy of tax provisions and any tax reserves made by the company to cover potential tax liabilities. So that's an important point to note when auditing under taxation laws. Assessment of tax risks and provisions. 6, evaluation of internal controls. Assessment of internal controls. The auditor evaluates the effectiveness of the company's internal controls related to tax compliance, and that may include reviewing controls over tax-related processes such as the identification and recording of tax transactions, proper documentation, and also adherence to tax filing and payment deadlines. Evaluation of internal controls is an important point to note when auditing under taxation laws. 7, interaction with tax authorities. Interaction with tax authorities. The auditor may communicate with the tax authorities during the audit process to clarify tax-related matters. He may also interact with tax authorities to obtain additional information or resolve any discrepancies or issues identified. So that's part of audit under taxation laws. Interaction with the tax authorities. Like in Kenya, the auditor may communicate with the Kenya Revenue Authority in order to obtain additional information in order to seek clarification on tax-related matters, and also in order to resolve any discrepancies or matters that may come to his attention during the audit process. Then lastly, number 8, reporting. Reporting is yet another important aspect when auditing under taxation laws. The auditor provides under reporting an opinion on the company's compliance with tax laws and regulations, highlighting any material misstatements or any material non-compliance, all right, or any material discrepancies. And here, candidates, the auditor's report may include disclosures related to tax matters, such as tax contingencies and uncertainties. So these are 8 important points to note when auditing under taxation laws. Number 1, understanding tax laws and regulations. Number 2, reviewing of tax planning and strategies. Number 3, verification of tax computations. Number 4, compliance with tax filing requirements. Number 5, assessment of tax risks and provisions. Number 6, evaluation of internal controls. Number 7, interaction with tax authorities. And lastly, audit reporting. Now, in closing, candidates, it's important to note that auditors conducting audits under taxation laws must stay up to date with changes in tax legislation, regulations, and interpretations. They should also maintain independence, objectivity, and professional skepticism throughout the audit process to ensure reliable and unbiased assessment of the company's tax compliance. Thank you for attending today's lesson.